Hello, this is Shawn Hirsch, a partner over at Signet Financial Management on the wealth management planning side of things. Today I'm going to talk to you about how to take advantage of historically low interest rates, both from a home perspective, mortgage, and also from a car perspective. Okay, so when I started in the industry 10 plus years ago, the 30-year mortgage, for example, was around 7%. Okay, today it's right around 3%. So we're in a very different interest rate environment than we were 10 plus years ago. As you can see at the chart that you're looking at now, the 30-year mortgage has substantially decreased over the last 20 plus years. Okay, so paying down debt, it's never a bad thing. We talk to our clients, we go through a plan, we look to see what makes them uncomfortable, what makes them comfortable. But a 3% interest rate is very different conversation than a 7% interest rate when I first came into the industry. So getting mid-single digit returns is realistic and possibly can use that capital, that money, to your advantage to grow more than the interest rate you're paying on the home. Credit card debt, 15, 20%, that's something we want to pay down. That's something that historically speaking, we can't average on a yearly basis, but a 3% mortgage is something that we think we can average over a long period of time. Another thing I'll say about the interest is that it's possibly deductible. So if you have a mortgage, instead of prepaying it off, you could use that interest on the mortgage to deduct it on your taxes. Okay, so look at the chart now that you're seeing on the screen. Historically speaking, a 60% stock, 40% fixed income allocation may get you around 7 to 8% a year. And again, that's through a full market cycle, not every year. So if you're paying 3% or so on a home on the mortgage interest, and you're making 6, 7, 8% a year in the market, you're actually arbitraging the interest rate and using that to your advantage to increase your wealth. Okay, so it's a very different conversation today when I'm talking to my clients than when I was 5 and 10 years ago. I'll transition now to a car. Okay, a car is a much different conversation than a house in the sense that the second you typically drive it off the lot, it goes down 25, 50% in some cases. So we definitely don't want to be prepaying or paying cash a lot of times for these cars if they're losing value the second you drive it off the lot. Not to mention, you may be able to get 0% financing, 1%, 2%, or even 3% over a 3, 5, 7-year period. I saw recently a 72-month, 6-year financing option with 0% interest rate. So to us, it's better to take that money, not invest it in an asset that's going to typically drop in value unless it's an antique car of sorts, and use it to invest in the market to get you better returns than buying something that we typically think will go down in value. Take a look at the chart that you're looking at now. There's an 89% chance in a large cap stock US index that you make money over a 5-year period. I like those odds for my clients. Almost 9 out of 10 times you're going to make money over that 5-year period. So to us, again, further evidence as to why using that money to invest in the market, not prepay the car, possibly pay the mortgage, because that at least is an asset that typically will hold its value or even go up in value, but certainly not the case for a car. People can talk to me, they come, we do financial plans. Everyone's situation is different. So I want to be clear in that you can reach out to us, we can discuss it, we can help. Sometimes it's more of an emotional decision and that you just don't want to have a mortgage in retirement or a car payment in retirement, and that's okay. We'll do that and help our clients in that case as well, but we always like to educate our clients around how to put them in the most favorable position. Locking in a 30-year mortgage at around 3% is really advantageous to you, or getting a car loan at 4, 5, or 6 years at 0, 1, or 2% is also very advantageous to you. So if this video resonates to you and you think that you want to reach out to us and that we can help, please do so at the number that you're seeing on your screen. We are certified financial planners, and this is really what we enjoy and are passionate about. Have a great day. We hope to hear from you soon.